In this audit and assurance episode, basically we'll be looking at audit functions, specializing on internal and external audit functions, and also the fundamental of external audit engagements. We are going to look at the accounting standards and the stewardship and agency of auditors. Then we are going to be looking at next episode key terms and stages of external audits. Those are the things that we are going to be looking at. So without any further ado, let's go into the program. We had earlier laid the foundation about audit and assurance, engagement, and the like. Audit function now can be divided now into two parts. Basically, the internal audit function and the external audit function. The internal audit function and the external audit function. We want to know who they report to and everything that surround them. For internal audit, basically it is a function that is domiciled within an organization, while as the name suggests, the external audits or auditors are external party to the organization. Then internal audit reports to the management and external auditors report to the shareholders. Of course, when we are talking about internal audit, on various business risk aspects, we must ensure avoidance, we put control in place and mitigation in place. Those are the functions of internal audit. And when we are talking about function of external audit, now we will be talking about a review of financial statements. Then for internal audit, effective and efficient measures must be put in place. Like I earlier said, there must be mitigation, there must be control put in place, which we talk about internal control. We must put in place even avoidance. Those risks we cannot avoid, we will pass it on to third party in form of insurance and the like. Those are the roles of internal auditors. For external auditor must report to the shareholder, and the report professionally must be in writing. Even as financial people, any engagement you have in your workplace, please document it. We cannot overemphasize it. That is one ingredient that makes us a professional. So external auditors reports must be in writing to the shareholders, and their report must be in a standardized, prescribed format. You remember the IASEs, you remember I told us that audit is regulated. So it must be in a prescribed format. But when we are talking about internal audit report does not actually have any formality than that. Auditor must just report to the management. But for external auditor, it is standardized. So the external auditor's reports must follow a prescribed format, prescribed content must be in it, and must be accompanied, of course, by the financial statement that we've reported on. It must contain a clear expression of our opinion. Please don't forget what an external auditor actually is engaged for, or she's engaged for actually is to express an independent opinion as to whether the financial statement meets fairness, truthfulness, fair presentation requirements. Now, when we are talking about modification or non-modification of opinion, an unmodified opinion simply means that auditors have concluded in on the financial statements review, and they expressed that the financial statements do meet the standard, the criteria, sets standards, and the requirement in accordance with the applicable financial reporting framework. An audit report that does not actually express an unmodified opinion then is a modified opinion. And when it's modified, it simply means that auditor is of the opinion that there is a misleading material which will be significant. Misstatement actually is in the account, in the financial statement. Then they have to modify their report, and in modification they have to express the particular area or areas of the financial that they actually have concerns with, so that others, the users of the information, will be able to know the aspects of their concern and how to go about their usage of the information. Having established this, let us now move on to the fundamentals of external audit engagement. Don't forget, we are coming from the functions of both the internal and the external. Let's specialize a bit more of our time and discuss fundamentals of external audit engagement now. Basically, we are going to break it down into three. We are going to talk about compliance with code of ethic or ethics. The internal auditor too, as accountants, but the internal auditor does not actually need to be a professional accountant, unlike the external auditor or auditors. So we are going to talk about the aspects of external auditors, compliance with code of ethics. We are going to talk about performance of an audit in accordance with frameworks, and audit with professional skepticism, the skeptical side of our professional behavior. Let's take it one after the other, starting with compliance with code of ethics. Now, our code of ethics, whether countrywide, nationwide, or international. Now the world is a global village, and we have international financial reporting standards regulating the preparation of financials, right? Now, when we are talking about audit, we have ISAS, that is International Standard on Auditing. Both are important compliance documents that external auditors must adhere to. So for the Code of Ethics issued by the International Federation of Accountants, and these are the aspects of our code of conduct. The integrity, it touches on objectivity, it touches on professional competence and due care. Our confidentiality must be intact, the professional behavior must be there. So I come again slowly. Our code of ethics dictates that an auditor must possess integrity, that is, fair and unbiased in anything we do, and our outlook to professional work must be objective. Objectiveness simply means that we relate with facts and not subjective, which is about using judgment. Don't forget, auditor must use, there are some aspects of auditor's work that requires judgment, right? So, but we must be objective in our expression of opinion. Then professional competence, an auditor must be a learner, must learn as much as possible and as fast as possible, especially in this dynamic, ever-changing world and industry that we are in. Due care is important, and to arrive at our code of ethics as it relates to our due care. Experience is a factor for due care. That is, ability to anticipate things even before they occur or they happen. We just know that this could be a factor even before we reach that stage of our work. That is due care and know how to go about it. So it comes with experience anyway. Then confidentiality. Everything we receive, the information we gather on the audit field stage, we must not disclose it to any other party, and it ends there. So that is talking about our confidentiality and professional behavior. Professional behavior is encompassing, actually. It talks about everything we've been discussing and much more. So even our mode of dressing, carriage, what we involve in, how we express ourselves and relate in the client's office and the like. So those are professional behavior. So that is talking about compliance with code of ethics. Another fundamentals of external audit engagement is the aspect of compliance with ISAs, that is International Standard on Auditing. So auditors should audit per international standard on auditing that actually relates with that aspect of the financial statement. We call it caption that he or she is working on. So, but any local national protocol will generally override the ISA. What do we mean by that? If we have ISA, let's say about non-current assets, and there is a local form of financial standard that talks otherwise about the same aspects of work. What we mean is that the international standard on auditing will be stepped aside and we implement based on our local framework. Then it is expected of the local authority actually to escalate those differential aspects of the regulations so that both the international and the local can work hand in hand and shake hands together. So basically, that is how compliance is when it comes to ISA, and auditor must work strictly in compliance with ISA. ISA actually, if we are to summarize it, is given the, see, I don't want to say warning, is given a prescription to the auditors that we should approach our audit based on risk approach. We call it risk-based audit approach to carrying on an audit of financial statements. So this is the second aspect of the fundamental of external audit engagements. I've spoken about compliance with the code of ethics. Then we just finished with the performance of an audit in accordance with ISAs. Last but not the least, I'm going to talk about the professional skepticism. Professional skepticism. What do we mean by professional skepticism? Basically, is the mindset set of the auditor that queries everything and vouch for everything and not believe in everything he or she is told, but based on fact. So that is skepticism. Is not to wish on, is not to say somebody is wrong or not doing things correctly. It's just that because we have the responsibility to ensure that anything we express our opinion, before we can express our opinion as to the truthfulness and fairness of the financial statement, we ought to have seen it, touch it, handle it. That is basically, we must have worked on them. We must have worked on them. So auditor must only take on what he or she had worked on, not told that this is how this thing is. You must ensure that it really is what they say it should be. Okay, having said that, it is not the auditor's statutory or primary responsibility to detect fraud. We keep coming back to that over and over again. So there is an expectation gap in this regards majority of the time. That is, what's an expectation gap? Expectation gap simply talks about what the people that engaged us expected of us to deliver and what we know based on our frameworks, based on ISA, IFRSs and the like, that we know that we need to do. So there is an expectation that will be alert to and also so routinely detect large-scale, non-complex fraud. So a case of non-detection should be judged on its own merits. So non-detection of a complex fraud does not actually necessarily mean that it's a poor audit. But auditor must put on the thinking cap, the questioning cap, and go to work to vouch for whatsoever he or she was given to ensure the integrity of the financials. Basically, that is what we are talking about when we are talking about professional skepticism. Last but not the least that we are going to discuss will be on the accountability, the stewardship, and the agency of the, well, we can include the directors, but especially the external auditor. So when we are talking about accountability, so it's a situation where one party must justify their action, inactions, decisions to another party. So auditor needs to justify his or her actions, and likewise, of course, the directors of the company must do likewise. So the director of the company are accountable to the shareholders, not to the auditors. So they report back to them annually or as the case may be, blah, 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 based on the financial statements they are presenting. So, and for them to present that financials, auditor must have gone through it. The aspect of stewardship is a responsibility to take care of resources on behalf of someone else, especially now when we're talking about the directors, we are talking about the usage and responsibility to take care of the company's resources on behalf of the shareholders. Likewise, when we are talking about stewardship of the auditor must utilize the resources in form of his fee or the firm's fee to ensure good delivery of quality audit work. That is stewardship. Then we get back in form of reporting to the shareholders. So the director of a company acts must have a stewardship role. So in which they get back to the shareholder. Then when we are talking about agency, that is being an agent of another party of another company. So it's describe a relationship where one person, that is the agent, is engaged to present or represent another person, which usually we can call the principal in a transaction, in an event and the like with a third party. So directors are agents of shareholders and auditors are agents of shareholders too. Before I quickly recap, my name is Gbenga Olatunji FCA. For those that are just joining us for the first time, please share, click notification, click all when you subscribe so that you can always receive notification when we upload new videos. Comments, should there be any aspect of coverage you would like us to touch on next? And if there are any other topics, any other courses that you want us to spread our tentacles across. Now, in recapping what we've learned, we've discussed about audit functions. We break it down into two: internal audit, external audit, and we discuss their responsibility, their reporting. Internal auditor reports basically to the management, external auditor reports to the shareholder. And when it comes to effectiveness and the area of their delivery, the internal auditor must ensure controls are in place. Of course, it's the responsibility of the management to ensure uh, controls are. Internal auditor must monitor it and if possible must advise. So internal auditor is a local person in the house, domicile in the house, and must work hand in hand with the management. Of course, the internal auditor usually will be part of the management team to advise and ensure control is in place. But when we are talking about external auditor, is all about financial statements, integrity, and reportage. So auditors, external auditor now is actually engaged primarily to express independent opinion as to fairness, truthfulness of the financials presented. And in doing this, the firm of auditors, accountants will either issue out a modified or unmodified opinion. It is unmodified when auditor or auditors conclude that the financial statement do meet requirements in accordance with applicable financial accounting standards and reporting framework. Then otherwise, if that is unmodified, modified rather, when they believe that of the opinion that something significant and issue that could mislead, misstatement is in the financials, and they must pinpoint the aspect that they have concerns with. Next, on GJAMES Associates, we'll be looking at the stages of external audit. That is the practical side of carrying out an audit step by step. What stage should follow what stage? So join us, subscribe, click notification, click all. From GJAMES Associates, we are value to life. Gbenga Olatunji FCA, GJAMES Associates, we are value to your businesses.